Welcome to the India FinTech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Welcome back to India FinTech Diaries, your one-stop shop for stories from the cutting edge of India's thriving fintech ecosystem. I'm Elroy, and today we're unpacking a fascinating subject, the paradigm shift Indian broking and wealth management industry is undergoing. And with me, as always, is my co-host Hemant.
Thanks, Alroy. And to help us truly understand the complex forces driving this strategic pivot and how industry leaders are responding, we have a guest who is quite literally in the driver's seat of one of the India's leading retail investment players. Please welcome Amit Majumdar, Group Chief Strategy Officer and whole-time director at Angel One. Amit, a very warm welcome to India FinTech Diaries. We are absolutely thrilled to have you here.
Hey, thank you so much, Hemant and Elroy. It's complete pleasure to be on this show with you, and especially to talk to two great people in the fintech space. You two have done enough and more, continuing to do, and I think I'm looking forward to this conversation.
Amit, before we get started with this conversation, you have been connected with this industry in some shape or form over the last 2 decades. We'd love to hear from you briefly on your personal journey and then tell us how the Indian retail investment space is fundamentally involved during your time in it.
So this is an interesting one, Elroy. I actually have started my career in consulting with ENY.
Very, very interesting coincidence since Hemant and me are both
Yeah, I know that.
ex-EY
I know that. So this
consultants.
is Yeah, I understand that. This goes back all the way to 96, 97 when I graduated from my CA. And that's how I started my consulting with ENY. And post that, of course, as like any other graduates do, they want to go to the industry. And so I kind of jumped the bandwagon. And in those days, financial services was taking a lot of shape and size. It was growing in all forms. And so the first choice obviously had to be the banking sector. So I kind of went and joined a Korean joint venture bank called Chohang Bank, very small, but in a very short while, I was able to do a lot of work with that bank, who usually in those days was looking at corporate banking for Korean joint venture companies in India like Samsung, Daewoo in those days, and a lot more.
Okay.
Post that, I kind of moved to Rabo India Finance, and this is an interesting assignment because this is where Yes Bank was born. So this was a bank, NBFC, which was led by Rana Kapoor and Harkirat Singh and the likes. And so I was in fact part of the initial team that was making a representation to RBI for the banking license. And that's how Yes Bank was formed. Post that, went to Ambit Corporate Finance, worked with Ashok Wadhwa for a while in the investment banking space. And finally, Angel One happened way back in 2004. And I've been now in various forms and shape because I've had two stints with Angel. One was with from 2004 until about 2015 early, and then back again in 2023 until now. And in these last 2 decades or so, not just brokerages or wealth management as a business, but also payments and a lot of other healthcare opportunities that I saw. But I think the primary time that I spent in the last 2 decades was in the financial services space. And I've had some fabulous learnings all along the way. And to your question, Elroy, on how this evolved, and this is very interesting because I have seen the brokerage space very closely from traditional days when this was a mom and pop kind of organizations led by family. And in those days, the landscape was very strongly favoring bank led brokerages, if you know, the likes of ICICI, SDFC, Kotak. And we were actually competing with the likes of them, given their size of the balance sheet and also given their sheer might in terms of their bank led branches, which led them a steady flow of customers into their brokerage outfit. And that is the kind of elephant we were fighting with. But we held our own. We also found in those days the nuances that a retail consumer will want to favor. And even in those days, we were actually very focused on pure play retail, though most other brokerages had not just retail, they also had institutional, proprietary transactions, but we stayed focused on retail for a very long time until today. So that was the landscape. And however, then and now, times have changed massively. You have seen how the internet penetration has taken shape from the first time when Modi government came to power and the Digital India campaign. That kind of changed the paradigm in which this business got undertaken in the past. In fact, it will be interesting for you to know that we were among the first few to actually start mobile trading way back in 2010-11. In fact, we had gone to the exchanges to make our presentations to them, and they gave us the approval. We were among the first few to actually start mobile trading. And in those days, 2011, 2012, about a crore of volume. Nobody imagined that the day will come today when everything will be done mobile.
Right.
Almost all transactions is now on the exchange through mobile. So, these are various trends that we have seen. Of course, there are consumer trends which have evolved, but more so as we go along.
I mean, this is very interesting. But before we go deeper into what Angel One is doing and the playbook that Angel One has, let's zoom out a bit. And from a 10,000 feet, if you have to talk about the key paradigm shifts that we have seen happening in the last 3 4 years, because a lot has changed. There have been regulatory shifts, there has been customer behavior shifts, and more like those. So, if you can help us understand those key paradigm shifts that are happening right now in the retail investment space and how that is defining your own mandate at Angel One as well.
Thanks, Eamon. So, you know what? So, this is a very important one. Look, until the digital penetration had taken shape, volume was where it was, customer participation was where it was. From the time the access need was solved by the digital platforms like us, customers came onto the platform in hordes, massive numbers from across the country. Now, when that happened, that trend nobody was able to actually discern very early in the days.
Okay.
So, in fact, COVID is not the only reason. Way back in 2018 and 19, this structural shift in the way services was being rendered to the end consumer had already begun to take shape. And when that happened, when access was solved, Hemant, it meant that more and more customers began to come on the platform. That means there was this underpenetrated need, or a need that was unsaturated so far. Consumers knew this as an asset class, but they had no way to participate in it. Because until this went digital, most of us brokerages were focusing around tier one and and metro cities because it was so cost prohibitive to go and set up branches. In fact, we were the ones who actually still did, but not through branches. We did it through our franchises. In fact, even today, as things stand, Angel is the largest on the franchisee network. But that was the only way we could have acquired customers. But when the digital shift happened, it led to significant economies of scale. We began to see consumer behavior significantly change. Until last time, or until about before this revolution took place, we usually had customers coming on the web terminal, doing their transactions on the web, and only during when the markets were open. So 9:50, 9:30 when the market opens until about 3:30 is only when the customers used to trade. And once the trading hours got done, people used to shut their shop, go back home. That's the way the life was. Through dealer networks, through branches, huge number of customers walking into the branches, sitting behind dealers, doing transactions. This was the norm. When things moved digital, few things happened. Consumer behavior is a learning that fintech platforms began to understand better, something that already the e-commerce platforms had already understood.
Right.
In fact, they were among the first in the digital space. So we began to learn the as we went along. As we went along, customers came on our platform, and we realized that they need simple solutions. They need easy to understand. They need accessibility, and they need stability. The moment those trends began to emerge, we quickly pivoted to a more simple solution, plain vanilla platform, which makes a customer easy to understand. At the same time, this very platform went 24 by 7.
Yeah.
So if you remember in the past when it was just a few hours, we went 24 by 7. Means now, today, as things stand, our platform is as good as any other e commerce platform, providing various products and services, all of course in the financial services space, all very well regulated, because that's the space we chose to be in.
Sure.
And therefore we stayed away from products that were not, there is lack of clarity from a regulatory standpoint. And as we did, consumers began to lap it up. They began to consume. This wasn't the trend before. We couldn't have rolled out more products than trading because the trading customer was only tuned to trading. They did not understand anything else. And for anything else, they went elsewhere. But when this digital ecosystem took over, customers wanted to have all their problems, needs, solutions resolved on a single platform. And therefore, as we started to go into cities beyond metros, and today, as we speak, more than 80% of our customers are actually coming from cities beyond metros. And the paradigm shift is in the new to market customers. We have close to about 70% of our customers who are coming for the first time into capital markets or equity as an asset class. So we are also creating a category. We are actually enhancing that category. And of course, since they are new to market, you can imagine how young they are, under the age of 25
Right.
to about 27, 20. So this is the change that has happened from a 35, 40-year-old trading customer to a 25-year-old, all needs wanting to be met, digitally native and savvy, and wants simplicity. So that's how this whole landscape has shifted.
Amit, you mentioned a very interesting point that today you're seeing majority of the new customers come outside of the metros, right? Any specific pockets of growth that you're seeing as far as geographical distribution is concerned?
In fact, the first reaction to that would be that this is uniform across the country. And however, just to give you a little more nuance around
Yeah.
it, until these businesses went digital, it was Western India. So Gujarat and Maharashtra was the prominent states from where customers used to come. Today, the scales have tilted. You have UP as one of the largest, and of course, even the highest
Yeah.
population. So therefore, it obviously had to be. But just because when the need got serviced, I mean, the access was a problem was solved. We found UP now tipping the scale, and we have people from North. In fact, substantial part of North, NCR, and Eastern regions, which was, if you remember, they were not even participating into capital
Right.
markets. So today, the scale is fully tilted. Of course, we continue to see growth in the traditional markets, but there the growth is very stable, around 15 odd percent. But the growth that we are seeing from other states is far beyond 35-40%. So that's where the whole customer segment is coming from. So the new growth, even in the capital market, even in the exchange, and for all of us players, has come from these markets and these customers.
And Amit, what's been the impact of regulatory action as well? Because typically, when you look at any industry, right, a lot of it is also shaped by actions that the regulator takes. So, can you also shed
Yes,
some light on that as well?
there's an interesting take that we have. Look, whether us or the regulators
Right.
had not seen this kind of volume before. So when that happens, while they are taking shape, nobody realizes it. But as they become massive, then thoughts begin to emerge on how can this ecosystem be made more ethical, more right for the retail, because we all understand that this problem of access is getting solved only now. There is a huge pent up demand that is yet to be met. So the regulators are actually going through this paradigm of how can this ecosystem be made more predictable, more dynamic at the same time, safer, so that the next growth, which is going to be 10 times more than what you have achieved so far, needs to be more orderly. Now, with that in mind, there will be some shift and changes. We saw even RBI, for instance,
Right.
they did not see personal loans as a bucket grow so significantly that they had to also come and bring about regulatory intervention. Same that we are seeing in the capital markets too. And Android is no harm in it. In fact, we are the ones who are actually should be participating in it to enable the regulators to understand the trends better, and therefore we are engaging with them much deeper.
Also, Amit, you talked about a lot of key drivers that are actually shaping the industry today, right? How is the industry reacting to this? Are they focusing on building deeper monetization modes or optimizing the long term value of the customers to basically the value of acquiring those customers? Or strictly moving to an asset light distribution model?
So Android asset light distribution model has already taken shape.
Yeah.
And that is going to be the future. And that's the way to go forward from here on. Given. Having said that, these understanding about this consumer has substantially improved, largely because of their affinity to digital influencers.
Sure.
I mean, this is another thing very important. Today, Indian consumer coming from these markets under the age of 25 actually take all their decisions digitally. They don't walk into any store to buy anything anymore, and they rely on influencers for them to take their decisions. In fact, you will notice that even in an e-commerce platform, for every product that is listed on the catalog, you will keep shifting that particular product. You will see at the end an influencer actually explaining that product or wearing that product to showcase, and Indian consumers begin to relate to that more. In fact, they have no affinity to celebrities, and this is a very important one. There's a very interesting report, by the way, by Bain, Google, and Temasek way back in 2023 called Economy. And this report actually has mapped the trend of these digital customers of India. And they say how these customers are so different from any other consumers anywhere else in the world and also within India from tier one markets. They spend 6 hours on the mobile platform. They take all their decisions digitally. And interestingly, their ticket size is the same or even better as compared to the ticket size in a tier one or a metro. And this applies to all platforms, whether it is e-commerce, grocery, pharmacy, merchandise, anything. Now, that is if that is the way consumers are going, obviously our platforms will also have to evolve in that form and shape. So to come back to your question on therefore monetization,
Right.
we have clearly seen that these customers are not just actually coming on the platform to avail of the basic service. They have a need and they absorb content. The moment we are able to demonstrate rightful content of a product that is relevant and right for this customer segment, they are absorbing that. So, therefore, both vertical in terms of getting more and more customers and horizontally across customer segments, we are seeing value emerge not just in acquiring more customers, but also more providing more products and services to the same customer.
That's interesting. And now let's bring this strategy home, Amit. Uh, as these powerful industry currents shape the industry, if you can help us understand how Angel One is strategically moving to not only weather this storm, but more importantly, convert it into a sustainable competitive advantage. As outsiders, some of it we can see, but it would be great if you can break that down. For example, we see diversification going around, we
Mhm.
see that you're going deeper or increasing the share of wallet for the customer, etc. So we can break that down into this top 4 or 5 steps that Angel One is taking.
Okay, so Hemant, on the strategy bit, what as I mentioned earlier, we are seeing various trends emerge on our platform. These are customers who are beginning to, while they are operating on our platform, are also giving us very interesting data around how they are evolving as they go along. Now, in the cohorts of customers that we have been acquiring, there has been a certain cohort of customers who have also been building significant amount of wealth or more under asset under custody. Now, over time, we realized that a time will come when these customers will begin to need digital wealth management solutions. Now, this is an important one because in India today, wealth as a solution is a very high touch model. It needs RMs, relationship
Right.
managers, it needs brand led, and there's a lot of cost associated with it, very highly prohibitive. But we are a platform company, we are a digital company, and there was no way we could have gone into wealth solutions with this kind of an architecture in place. But over time, when we began to see these customer segments who take all their decisions digitally, we felt time has come for us to start evolving a digital wealth solution for these very customers on the super app platform of Angel One. So about a year and a half ago, we set up our wealth business called Ionic Wealth, and the whole idea of setting up this wealth business was, a, of course, the fact that the business will grow on its own steam, but b, which is more important, is figuring out whatever we manufacture for the ultra HNIs and HNI segment, what part of that product can be digitally enabled on our super app platform. In fact, as we speak in this financial year, one of the key strategy that we are playing out is beginning to embed those wealth products and journeys into the super app platform. And when we do that, we do it very selectively because, as you know, we are not a marketplace where we provide all products and services to every customer and you come on my platform and you take a choice and you take a selection. We don't do that. We actually make every product live on a particular customer's login very judiciously depending upon what that customer needs. This automatically solves for too much clutter on the super app. So, therefore, every customer gets to see whatever he is looking to buy, and then every subsequent time he logs in, he will only see those products. Wealth was one such product which we have decided to go live this year, and we are seeing some very interesting traction already. The other trend that we saw over the last couple of years is protection, which is insurance. Now, we have been an insurance distributor, but today, what are we distributing? We are distributing whatever is available in the market. So, primarily, whatever is being manufactured by the current legacy insurance manufacturers, and they are distributing this, and they are distributing this through a very cost prohibitive physical structure, and therefore selling products which are very complex, which are very expensive for the end consumer. And therefore this was one reason why insurance or life insurance or protection has never penetrated so far as India is concerned, because it was always so complex and people never understood it. But what we saw over the last few years, that this trend has emerged, especially after COVID. People have begun to understand the need for protection. Until then, life insurance was more a savings product or a ULIP linked product, and they considered that if I'm paying premium, then I should also get some returns out of it. But today, this young customer, by virtue of his access to internet and his access to influencers and his knowledge about the segment is so good that he now knows to differentiate between what is investment and what is protection. And that has led us to believe that protection is now relevant even for these customers. And we have seen some very interesting tailwinds. Customers at the age of 25 to 35 have begun to understand protection as a product. Regulatory shift is taking place where IRDA is now very keen, given their need for insurance for all by about 2047, their mantra. It has become relevant for the regulator also to look at how insurance companies can innovate.
Right.
Innovation for the legacy insurance companies is a long time behind, because they will find it very difficult because they're already in a legacy business. And therefore people like us have the ability to innovate on digitally, provide more modular, very simple products, and also begin to influence health outcomes of these customers when they begin to visit our platform. So that gives us a significant opportunity for us. And the regulator also, by the way, in their IRDA bill, have stated that they may also actually look at bundling investment products along with protection. Now, if something like that takes shape, then we have a right to play, because we are already a super app platform doing very well on the wealth side, on the credit side. Definitely, then we should be the ones who will be able to bundle an important product for a customer. Like, for instance, we already have the AMC. And so, some passive mutual funds, along with some wealth product in a very satellitized manner, along with insurance, is an opportunity that we see. So we have gone and started our joint venture. It's just very early days. We are in the application stage. Hopefully, we'll go live in the next financial year. So we have a role cut out over the next 3 years, that we need to double down on how we continue to acquire these set of customers. How do we make it viable on our platform? At the same time, for the customers that we're acquiring, they are anyway profitable from day one, the moment they start participating in equities. But then continue to cross sell all relevant products and continue to have more and more wallet share from these very customers.
Amit, these days you can't talk strategy without discussing generative AI. It's pretty much become the flavor of the season. So, have you started leveraging generative AI internally, externally? And if so, can you give us a couple of use cases and results that you're seeing by using AI in the organization?
Gen AI is a very abused word.
I know, I know.
So I mean that's the way we look at it, and so we are very careful and not fall into the bandwagon. I'm sure you all understand this and you have seen this very closely. So what we are doing, Elroy, is our strategy is hinging on four pillars. One is the AI chatbot and the
Okay.
co-pilot, where you are actually influencing pre-sales. We're answering questions like product queries, or what the customer needs, whether he needs a brokerage account, whether he needs a mutual fund account, whether he needs a fixed deposit or an insurance or a loan. and compare those options. So what we are letting these customers do on the pre-sales is come onto our platform and compare your product. The moment they do, they will do an automated risk profiling, and we will know what that customer is really looking to do. That's our pre-sales strategy, where we are actually monitoring what the customer is doing on the platform and then deciding. And then when he chooses a platform, our system takes over on onboarding that customer on that particular journey. There again, we are using AI to be more interactive in the KYC guidance, because though KYC is very digital and it takes about a few hours for the customer's account to go live,
Right.
it still is regulatorily complex product, a document. So therefore, there's an interactive KYC guidance, and making him set up the account, and then making him also get to a first week of success plan. If it's an SIP, then how can he start an SIP? If it's an equity, how can he deposit funds into the bank account? That's where the onboarding journey is completely digital, where an AI agent is taking him through, hand-holding him through the onboarding journey. Post sales, obviously, so both pre sales and post sales, what I mentioned. Post sales is once now that the customer has got onboarded, his portfolio health checks, rebalancing, tax loss harvesting, and all of that, SIP renewals, claim support, all that is being done purely by our AI chatbot and Copilot. So this is a first pillar that we spoke about. The second pillar is proactive, reactive, and effective communication. Means that we have to be very mindful of how we communicate with the customer, because he's an omni-channel. We have an omni-channel communication. We have WhatsApp, we have emailers, we have SMS, we have the app itself. So we are very mindful that our data, our system should be able to capture data about how we have reached out to a particular customer and how many times, and therefore which are the channels that needs to be judiciously used. Again, this is completely AI driven. And we have also made it event driven journeys, real time triggers, for instance. And then, of course, intelligence is already built in terms of how do we send those messages, what kind of optimization we do on those messages, fatigue control so that the customer doesn't feel. So all this is possible only in a digital and in an AI environment, which physically was not at all possible. That's our pillar number two. Pillar number three is product discovery and personalization. And this is important, that we should allow the customer to, or benefit the customer by making him realize what kind of products we have on our
Right.
platform. How do we personalize those customers? How do we personalize their experiences? And this is what I started, and I've been saying this for a while now on this podcast, that personalization means that you are making that customer or the platform is providing only that product that the customer needs it, and not pushing him products that the customer doesn't need, because it is not about revenue maximization, it is about maximizing the experience of the customer. Because in a platform play, you don't need to push it. And that's exactly what we are doing through our AI journey, where we are tracking the customer's behavior. We are very closely seeing what content he is observing. And as he does that, our platform is engaging with the customer to give him personalized experience. The last and most important is, once he has got sold, he is now in the system for a while, time has come for us to now enhance his experience on the personalization. So we call it hyper, where we say things like UI nudges around portfolio health, around wealth solutions. So those are the next steps we are looking to do. So these are, as I mentioned, the four pillars, and within these four pillars, some of the use cases which I explained, and it's very easy for anyone to assimilate. So that's how we are taking our AI strategy as of now.
So, Amit, in my day job, I am now interviewing a lot of GenAI people, and there's a use case which came across my table. Now,
Mhm.
considering that you get a lot of new to market customers, have you seen that these static portfolio statements that a customer receives getting using the audio generation, video generation capability now that Gemini,
Yeah.
Nano Banana, all these guys have, getting converted to a more video format or interactive format? Is this a big use case in the industry, or it is just a gimmick as yet?
So another thing, that so there are two ways to look at it. One is customer is currently looking at simplicity, but accessibility also, in the sense he's saying, okay, give me these statements, but I should be able to find it very easily whenever I want. Okay. Now, what we have done, therefore, from a AI perspective is, or a chatbot perspective is, all he has to do is say, you know what, I had taken this statement 2 days ago. Can you bring it back to me? I should be able to bring back that same statement that he saw. If he says that, can I know what has been the current result of my statement? Of course, we already have in our app the My Wealth section that gives him all his assets under one roof. And in fact, it also helps him pull data from across all other platforms where he's having his assets and therefore concentrate his and see his concentrated or consolidated portfolio. But what we are doing is reacting to what the customer need is instead of giving him what he doesn't need. So there's a lot that our Gen AI specialists talk about that we can do this, we can do that, and we are fine. And at times, some of these are very unnerving, and we like it to be that because it can get very discomforting for us. So we then dial it back and say, okay, not so much, but let the customer know what he's looking to, and we should be able to quickly over the fly in a few seconds give him what he's asking for. So that is a use case that we have worked on so far as our AI chatbot is concerned. We're just reacting, we're letting the customer because even if you give him something, if he's unable to understand it, it's not going to serve any purpose. Now, along with what he is asking for as a statement, he may actually say, you know what, I have this stock in my portfolio called ITC. Can you give me some quick two-liner on what the stock will eventually do? And I should be in a position to hear him and give him a good fundamental view in a manner that he is able to absorb, not very complex jargons, but simple that, okay, two-liner, this is how we see the stock performing over the next 3 months. This is how we are seeing the use case evolve as of now, Hemant.
Amit, what is the one single challenge that generally keeps you awake at night nowadays?
Okay, so honestly, nothing that keeps me awake, but there's an important aspect that you asked, Elroy, and this is very important. In a digital environment or in a digital ecosystem, leadership is very important.
Right.
Once you achieve a leadership position, then benefits start flowing in automatically. It's like a flywheel, and one pillar will or one will feed into the other, and you will keep growing. So one of the things that we are constantly working on, and I wouldn't say we are worried about it, because I think we are very clear about that one single aspect of our business. Whatever we do on the incremental business, we should be among the top three. So this is an important aspect in all our minds. And if you say keeping us busy, keeping us worried, keeping us uncomfortable, is this very fact. And that is important today as we stand, Elroy. We are among the top three in all the space that we are currently in. Incrementally, we are among the top two. And we also know, for instance, legacy businesses like credit, where there's a huge base effect already. But we know that on an incremental basis, we need to be there among the top three when we start growing our credit book. So, this is one aspect that we have to constantly worry about.
I missed that one, Amit. When you refer credit, have you taken NBFC license or it's primarily distribution?
As of now, it's a pure distribution model. We do have an NBFC in our fold. We haven't gone live with our NBFC in terms of credit, taking our credit on our own balance sheet. But given that the tailwind that we are seeing on the digital side, and also a lot of regulatory enablement that has happened in the recent times, where even a broker is permitted to have an NBFC and who can provide credit to the end customer, we see a significant use case emerging, especially against loan against shares, loan against mutual funds, which are very adjacent and comes naturally to a platform like ours.
And Elroy touched upon what keeps you awake. On the opposite side, what is, because you spoke about multiple initiatives. There's the AMC in the picture. There's credit happening. There's a super app happening. There is insurance happening. And it's difficult to choose your favorite child among all your children, but still, what is this one initiative that you're really, really most excited about, that you truly think has the potential to disrupt the market or grow the pie, however you want to look at it?
So, okay, interesting one. I did rather reflect on it, but what is important is that there are three large profit pools so far as this business is concerned of retail financial services. And what keeps us excited or keeps me personally excited is in these three profit pools, one is capital markets, wealth, and credit. And we seem to have the right strategy for all these profit pools. So the excitement would be that how we are able to get to our leadership in these three profit pools, one already achieved, which is capital market, which is a tough one, by the way, and then the credit and wealth. And the most important part, Hemant, is that while we have remained largely a transaction-led model, exciting would be to see these customers evolve into more annuity-led businesses where they begin to value the service that we are entering to them. So once we see that value emerging, where a customer sees, you know what, I am getting all my needs fulfilled on this one platform, and it is so specific to a particular individual customer, and that is a point we want to solve. That's one problem we want to solve, that have an app which is so simple, that is less clutter free, and is able to give that one solution to the customer which makes him feel so loved about our platform. So I think from a happiness standpoint, I think my happy state would be when we know that we have a significant tailwind in terms of customers coming and adding, and these customers eventually evolving into a more annuity based revenue. That's our way of looking forward.
Amit, it's been an absolute pleasure to have you on the show. Your insights into the strategic shifts, the trajectory that the Indian broking and wealth management space has taken, have been very incredibly valuable to us. Thank you for joining us.
Thank you so much, Elroy. Thank you, Hemant, for this.
And to our listeners, thank you for tuning in to another episode of India FinTech Diaries. If you enjoyed today's discussion, don't forget to subscribe and stay updated on the latest in the Indian FinTech landscape. Visit our website for show notes and other exclusive content. Until next time, stay safe.